So we're going to talk a little bit about the housing market, right? This is a topic that's near and dear to my heart because just a bit of background. Before I got my mortgage license, I was a real estate investor, right? And people started seeing after a while that I was doing pretty well, so they come to me for advice. They want to buy a house, but they have bad credit. They want to buy a house, but they don't have provable income. So I was able to find solutions for some of these people. Even some people who had a house, but they're in danger of losing it, power of sale, right? I assembled a team, right? So people with the lenders, my real estate lawyer, so on and so forth, a team that would help these folks out. And one of my friends, my father's friend actually, was a real estate agent, said to me, Kevin, why don't you get your mortgage license so you can get a commission on these deals you're doing anyway? And that made sense. So did the mortgage course, became a mortgage agent years ago, and then broker course, and last year I opened a brokerage. So the housing market, though, is what we focus on because, again, we like to focus on real estate investors, taking the first-time home buyer and turning him into somebody who owns 3, 4, 5, 6, multiple properties, right? Because that's the way you're going to generate generational wealth. So these are the statistics from 1973 to 2018, the housing market in the GTA. So back in 1973, you could have bought a house for $40,000. Good old days, right? So we're going to focus on this column and that column. We're not going to focus on sales, just average sale price, right? Yeah, I'm going to say that again. $40,000 for a house, and that was the average. So there were some houses you could buy for $20,000, $18,000, right? And gradually over time, of course, you get up to about 800 grand, right? So we did the math, and that's an increase of about 7% per year appreciation, right? And this is the way it looks on a graph. So, and this is the interesting part. Some of the people here might remember the housing collapse, of 1989 into the early 90s, right? But if we look at it, so this was the $40,000 a year, and it gradually increased, and then there was a rapid increase, right? And then a sustained crash. This is the only sustained crash that we've seen in 45 years. If you look at here, this was 2008, 2009, the global financial crisis, right? Sparked by the U.S. housing market bubble burst. We were barely affected. 2 reasons. Toronto's housing market is super strong, right? For a number of dynamics I'll get into. And also because Canada's mortgage rules are so tight, what you saw in the States would never happen. There's a lot of predatory lending going on in the States. There's no regulation. It was a Wild West, so it's bound to happen. But our mortgage rules are so tight and our market is so strong, that's essentially the extent of that crash on us. Now, what it doesn't show there, and what we'll get into, is certain segments were affected more than others, as they always are. So during that time, the condo market was hit pretty hard. And unfortunately for me, I had 2 condos at the time, and it was an ugly situation. But houses, like detached single houses at the time, were fine. And then after that crash, well, it wasn't a crash, but it was kind of leveled off. There was a rapid increase. You guys remember a few years ago, house prices were literally going up 33 and 34% per year, right? And of course, not everybody, but certain people were saying it's unaffordable. People can't afford to buy houses. The government has to do something. And so they brought in a number of mortgage rules to restrict, the ability for people to qualify for mortgages, right? In order to bring down the prices of houses, right? Now, that's not a natural market dynamic. That's an artificial measure to try and bring the prices down. It doesn't actually address supply and demand, right? Go ahead.
So did foreign investment have anything to do with it?
So a lot of what happened from 2008 to 2016, 17 is that the global investor market looked at Toronto and realized Toronto's hella cheap because it's a world-class city, right? So you compare it to Tokyo, London, New York, Toronto is very, very cheap. And so people in Dubai or Hong Kong said, this is where I want to put my money because they knew this was going to happen. You know what I mean? It was underpriced. So yeah, there was a lot of foreign investors looking at Toronto, particularly the downtown condo market, because it's something you can just buy, lock up, and leave. You know what I mean? So for them, they looked at it as a great investment. If not for some of the rules that you like the stress test and so on, the housing market would have continued to climb, and eventually Toronto would look like New York, right, where 90% of the people rent because they can't afford to buy, right? And the people who did buy for pennies years ago are now billionaires, right? That's essentially how Toronto would eventually look. So we'll look at some of the factors affecting property appreciation. So number one is area. They always talk about location, location, location. So I've literally seen a rundown shack in Toronto selling for $1.5 million and a mansion out in Ayr or Woodstock selling for half that much, right? It's all about location. Downtown Toronto is the most expensive place outside of Vancouver in the country, right? And as you go farther out from downtown, it gets cheaper and cheaper and cheaper. So ever since the stress test, people were worried about, okay, how do I qualify? And we just say drive till you qualify, right? So into the 905s or the 519s if you have to, drive till you qualify, right? The age of the property. So this is why I really like pre-construction properties. New properties appreciate much faster, right? Housing type. So if you're familiar with condo townhouses, those as they get older, hardly appreciate at all. Some of them depreciate, right? It all comes down to desirability. Everybody wants to live in a single detached home, but then you have to counterbalance the desirability versus the affordability, right? Nobody can afford a detached home in the downtown core of Toronto. So there's the desirability of a detached home, but then there's also the location, right? You might not be able to afford it downtown, but in Brampton, Mississauga, it's more affordable, right? And then obviously condition. You want a house that's in good condition, right? So here's a map of the Golden Horseshoe. And I don't know if you guys can see like these little green areas. Can you guys see that? Okay, so that's called the green belt. And the government traditionally has never allowed development in those green areas, right? So you're basically, developers are only allowed to build in this thin sliver of land going around Lake Ontario. And because there's less and less land to build on, the prices have to go up, right? It's the laws of supply and demand. Outside of this green belt, out here, prices are soft. There's no demand, right? In here, you're going to see a lot of the skyrocketing prices because we're running out of land. So this is a snapshot of the housing market 2018. Remember, we saw that dip, right? Sorry, this is 2018 to 2019. So we're actually back up. Prices have come back up in 2019. Although the year's not done yet, we've seen a recovery, right? So it's not huge, but it's 3.2%. So from that high of early 2017 to the low of 2018, it's a drop of 4.5% on average, right? The single detached houses, the ones that are the most expensive and least affordable, fell the most. Those fell by about 14%. The condo market that got hammered in 2008, 2009, kept going up. It never got hit, right? But it all averaged out to a 4.5% drop. And so far, we're looking at a 3.2% increase over last year, right? So it's starting to come back up again. So this is the data that I look at when I'm trying to maximize my ROI, return on investment, right? So identify areas where I can beat that 7% average, right? So right now, as I said, condo apartments, because they're affordable, are what most people gravitate towards. So if you look at Peel region, right, high-rise condos went up 12.5%, right? Mississauga, almost 13%. If you look at a single detached in, where is that? That's Georgetown, 9.5%. So I try and analyze this to see where I can beat that 7% average. Make sense? And this is a chart of the overall GTA market since 2005. So like the last 15 years. And you'll see that peak in 2017, the drop off into 2018, and it's back up again. Now that's the general market. So that includes houses, townhouses, high-rise condos, all property types. But if we isolate just for condos, high-rise condos, you'll see that there's no drop, right? Because when houses got too expensive, and literally a detached home in Toronto was, well, it is now 1.227 million, but at the height it was 1.561 million, right? So they couldn't afford that. They gravitate towards houses that they can afford, and that's condos, right? You can afford a $500,000 or $600,000 condo, and so that's where you see most of the money going.